Okay, so welcome back. So, as I discussed in the last video, that what we're going to be doing in this video is I'm going to be teaching you signs of the big boys. Stuff like lifting, holding. I'm going to use different words that they use in the market because I don't want you to get confused by the words bids and offers and stuff like that. I'm going to keep it simplistic so you understand, because it's the concept that you need to understand, not the terminology. Terminology never made anyone anything except a angry conversationalist at a dinner table and looking down on people. So forget the vocabulary. Let's get to the point of what am I trying to say. Okay, that's the key. Okay, and that's exactly what we're trying to do with the market. Not trying to label it, but in fact we're trying to understand what's the market trying to say. Okay, so keep these things in mind. All right, so we're looking at New Zealand Japanese yen. Time frame does not matter. Okay, so leave the time frame out of it. Okay, I'm going to even take it down. Let's say we're going to switch it up. We're going to take you all the way down to the 15 minutes. Okay, so you're looking at a chart right here. Multiple points of the market. It's moving, it's moving, it's moving. And as you're looking at this, you develop a plan. Let me switch the time frame so it's easier for you to. Let me switch currency. Let me see if I can take it to Euro USD or something. Okay, this is a design a lot of you guys can relate to. A seller's market, a nice pullback, blah blah blah. So let's take a look at a scenario that you might be used to. Something like this. Sellers are coming in, here's the pullback, etc., etc., etc. Okay, the traditional design. Okay, now you do your research and you're saying that, okay, the markets are gonna be going for a sell. Okay, because it's in a seller's territory. This is seller's area. That's the guy who started it. Give me a pullback. Show me some buyers to come in. Once the buyers come in, the logic is now active because people are turning into buyers. As they turn into buyers, I need to see, etc., etc., etc. Okay, now, what we're doing with trade management is we're trying to figure out the rhythm of the market. Okay, so up until now, you've trained with everything that teaches you how to label the market. Okay, I've tried to make it into a shortcut. Now, some of you guys might think already the shortcut is difficult. Wait till you get into this area. It becomes even more difficult because now we can't just label anything as what we like to do in life. We actually have to understand what it's trying to say, as if we do not speak the language, but we're trying to understand what it's trying to tell us. That's the key. That's the key. You want to pick up on these things. Okay, so here we go. Buyers start to come in. Look at the way the buyers come in. Okay, let's start with the nitty gritty. Aggressive movement starts from here. Let me move this out of the way for you guys. Okay, and let me make this a little bit bigger so you guys can see it. Okay. Buyers start to come in very aggressively here. Gets all the way up to this guy and halts. Okay, gets all the way up to that guy and halts. Now, we are aware that this is a seller area. Okay, we're keeping it simple right now. Just focus on what I'm trying to say. Okay, we're aware that this is where our strong seller came from. So we try to expect, well, maybe a seller is going to come again. Seller comes again, and he isn't able to perform much. Okay, if he isn't able to perform much, well, here it needs to be the buyers again, because remember these big buyers? Okay, here comes the buyers again. Buyer doesn't do anything. In fact, he gets knocked back down, back to the same price where sellers are not letting them through. The next buyer once again. 2 attempts. Buyer is not getting anywhere. Now it's starting to tell you there's something up with this sell area. There's something up with the sell area. Okay, there's few scenarios that happens. Okay, so in a buyer's market, you know why you have a higher high, higher low, higher high, higher low, higher high, higher low? Okay, people just keep labeling stuff. Oh, that's a higher high, higher low, so it must be an uptrend. But do you even know what that means? What is a higher high, higher low? Okay, so let's go into the detail of that. A higher high, higher low sequence, something like this, it means whoever started this buy, think about it. He's buying at this price. This is the price he likes. But he buys again at this price. Why is he buying at a much higher price now? Can you tell me what that means emotionally? Yeah, if you're saying desperate, that's good. That's a sign of desperation. That's a sign for us that tells us, hey, none of us can move the market. Only person who can move the market is the big boy. And if the big boy is desperate, that's a sign for us to follow him. Okay, he's desperate, which means he knows something we do not know. Okay, keep that in mind. So he's showing signs of desperation. He is what this is called is lifting the offer. Okay, we're gonna forget the words. He's lifting, and he's holding at a higher price. So not only are you just trying to understand that prices are starting to buy again from in this area, but you're also starting to understand based on your knowledge that it used to be here, and now he's willing to pay a little bit of a higher price. All this needs to come to you quick. Okay? It will come automatically quickly. Initially, it's going to take some time trying to understand and get the idea of what's going on. Okay? So let's go back to this area and let's discuss this in detail. Okay? So there's a strong buyer here. He goes up aggressively and he comes to a halt point. Okay? Which makes sense. That's a seller's area. We're expecting a halt point. Okay. Now, trade management is understanding these levels, these zones, and everything. Okay? Remember those days back in the day when you used to chase the market? Yeah, I hope you're not doing it now because you're going to be in trouble by me if you're still chasing the market. Okay, so yeah, no student at Urban Forex is supposed to chase the market. None of them. You'll be in big trouble by me personally. Do not chase the markets. But doing this style of trade management lets you know ahead of time is, okay, the prices are going up, and then the seller smacks it down, but he doesn't do much. So do I buy it now? Obviously, I cannot buy it up there because I am aware that this is a seller's area. Okay, that's poor trade management. If I buy it up there, I need it to go higher. And what about my stop loss? What, below this guy? You see? You see how poor that entry becomes? So you want to be aware of these things and be like, okay, I can't buy up there. I want to buy as close as I can to the price he likes. So we're going to study this zone right here, and we're going to see how the markets get smacked down in that area. So let's go down to the 5-minute chart. Where are we? Here we are. Okay, so coming from this zone, we're one time frame lower now. We had a strong buyer going up. He gets hit, okay? He gets smacked down by this seller here, okay? And he smacks it down pretty aggressively, but large tails and everything coming in. So we're like, okay. And then the buyer comes right back up. Does he perform? No. He just barely makes a higher high and instantly crashes back down, which means he didn't make any higher highs. Buyer tries again, and then he crashes back down. Now, this could be a sign of, oh wait, is he stepping up? This was his buying price, and he's buying again here. Is he stepping up? Is that desperation? Oh yeah, that's desperation, for sure. But you're doing the desperation at prices where the sellers love that price. The sellers love that price, which means for them, this is their cookie jar to sell. Right? This is their point that they love to sell. They're like, oh, thank you. We want to sell here. So we obviously cannot give in to this desperation and buy right up here. It's too dangerous. It's too dangerous, even though we see the telltale signs. Now, the next thing. As we see the markets move down aggressively, now we're aware that, okay, finally prices get knocked down. Okay, finally prices get knocked down. They start coming down. And we're now starting to approach an SNR area or the last time the buyers bought it. Okay, these are the two areas. The whole zone is important to us. Okay, this is the guy who started it. And that's your SNR area where the breach happened. These are all important areas. Prices come down to here. Around this area, they start to react. Buyer comes in hard. Okay, that's a little bit weird. Okay, so the next SNR is here. Well, if this is a strong seller, is he going to step down and become desperate? Oh yeah, he became desperate. He hit the sell. The sell went, he went. How far did the sell go? Is that a lower low? Barely. Barely. What happened to the next one? The buyers came back immediately. Now, when you put all this information together, can you feel the power of this big boy stepping up and saying, no, 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 no. I will take it. I will take this price. Now, here's where trade management comes in. You felt the rhythm, and you're like, I can see that I cannot buy blindly just at the first time this thing touches down. I want to see that this seller is losing steam, but at the same time, my buyer is now willing to pay a much more expensive price to keep buying. Okay, otherwise this can turn into a range, right? This can come down lower and then the buyer can buy at a lower price. For him, it's a good thing. But our buyer is showing signs of desperation. Okay, so we're keeping track of these things. Sellers come down aggressively. You might, okay, I can see a lot of people like confused right now. So you're gonna have to watch this a couple of times. We're gonna do more examples, don't worry. Just watch it a couple times, take it slowly, and try to, whenever you're done with all this, open up your own charts and try to see if you can talk through the rhythm. Talk through the rhythm. The reason why you have to talk through the rhythm verbally, don't do it mentally. Stop doing stuff in your mind. Do it, say it outright. Don't be shy. Don't be afraid of what the world thinks about you. Don't be afraid of what the next person at the coffee shop is thinking. Say it out loud. Let your brain learn faster that way, because you need to ingrain this in your mind as much as possible, because you have to do this fast. Okay? So, now, sellers are coming in, stops here. Okay? And then the buyers kick in. Okay, buyers kick in. Are the sellers going to step back down and saying, I will take it for a lower price? That's fine. That means the sellers are desperate. Okay, they take it for a lower price, but what do they do? Look at that red candle. What do they do? Nothing. They barely make a lower low, and immediately as they make a lower low, our big boy says, I love that price. And they take it all the way up to here. They take it all the way up to there. Now, that tells you our big boy is now desperate, okay? Because remember, who wins? The bigger player always wins, right? You got to keep that in mind. So if you assume that this is a seller's market and then we need a pullback to come in to do the sell, then you can think, okay, looks like the big boy is going to start to come in now to do the buys, to take the price much higher. Okay, now when it comes to trade management, can you, when the price gets up, okay, when this happens and the price gets up to here, you're like, yes, my big boy is desperate. Can you just hit a buy right here? Remember, where is your problematic area? You can't just assume it's going to go to the next level now. You still have problems in the same area that the price kept getting knocked down, knocked down, knocked down. Who knows, this area might hold again. You want to get away from that as much as possible. Now, you're going to go into trade management and be like, okay, how low can I go? Can I get closer to this SNR? Okay, so now you're fighting for the best price. You now are no longer trading like a retail trader and just hitting buttons because you feel like it. You are now in the game of, come on, man, give me a lower price. Come on, man, lower price. No, 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 I don't want that. Get rid of that. Give me a lower price. You're going to give it to me? Otherwise, we don't do business. You are now on the auction floor, naming your price and saying, I want this price, otherwise, screw you. I don't want to play with you if you don't give me my price. You are now turning into a businessman, businesswoman. That is the essence of trading. Okay, with this trade management style, you're getting closer to the understanding of better prices, better entries, safer exits, and you're trying to gauge all that as much as you can, while at the same time monitoring the heartbeat of the market and saying, is my earlier big boy stepping in? Is my temporary big boy who was selling it, is he stepping away? What's going on? You're feeling the pulse. Okay, what else does that mean? Take a look at this. Look at the speed of the movements here. Look at the speed of the movements here. Would you say there's some larger involvement in here? Oh yeah. There's a lot more involvement in there, right? There's some big players starting to get active. Okay? So all of these things will start to speak to you slowly. It'll speak to you. Once it starts to speak to you, you want to build this as instinct or as second nature. Okay? That's when you start to really feel the rhythm of the market and you're like, okay, I see what's going on. All right, so now let's move on to, actually, let's just keep going. I know it's a little bit long, this video. I like to cut them up in pieces, but let's keep going. I want to take you to the next stage, okay? Let's say this market now jumps up. You don't get an entry price in case you're thinking of a buy because you're thinking, I want to do the sell. I'm thinking big picture. Okay, but you see the buyers are desperate because of all this stuff. We're like, good, let them be desperate. Let the world become a buyer because I'm looking at the big picture. And the big picture says sell, baby. Because that's seller's territory. That's the guy who started it. You know the whole story, right? Now, buyers coming up very aggressively. You be aware of that. He's powerful. He's strong. You're aware that this is the price he liked recently. You're aware that this is the breaches he's made recently, which is SNR. Okay? You're watching every SNR level as much as you can. Then price gets up to here and it starts getting smacked down. It's like, why up here? Okay, maybe SNR from here. Okay, doesn't matter. But price is starting to get smacked down. Oh, sorry. Prices are starting to get smacked down. Okay? Something here happens here. Prices get smacked down. Buyer holds. Buyer keeps going, gets smacked down again. Buyer holds. Notice how the buyer keeps holding this price. Desperation? Possibly. But does that desperation have any power? It's not really doing much. But he's holding prices up there. Now, a hold is a sign of desperation, which means we better get long with this guy. But if his buys are not performing, do we know why it's not performing? Yes, because you're in what we call a money spot, right? You're fighting a big seller. So obviously we don't want to buy up here, even though he's holding. We're like, I know you're desperate, but I'm sorry. That's not how I do business. I'm not taking prices up there. No way. Okay? Buyers go up again. Makes a higher high. We're like, oh, is that a higher high? Looks like he got up there, but he got smacked down. Next candle, instantly back down. It's as if no high, no high, no high, no high. Sellers come down, buyers again hold. Look at that candle with that tail on the bottom. They hold again, but they do nothing. Sellers come back down aggressively, come back down to this price, and we're like, okay, this is his holding price, he's holding price, he's holding price. Now, we're coming to the next step of the lesson, which is he was holding, okay? Which means he likes a price, he's holding. 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 Everything points to this guy is desperate because his holds are much higher than his previous hold. Correct? Now, if he's holding, what does this mean? When you have a probe like that, because the market drops but instantly goes up, what does that mean? It means he was desperate, he was holding the price, but he said, let me see if I can get a discount, and he comes back and he holds it higher. If you're so desperate, why did you test the market? If you really want a car so badly, okay, if you want whatever you want in your life, let's say, you know, think of any product in your mind. So some people might be thinking Lamborghinis, Ferrari, some people might be thinking, you know, handbags, shoes, whatever it might be. Think about it. If you want it so badly, the prices have risen and it's $1,000 more expensive, and you're like, okay, I'm gonna buy it, I'm gonna buy it, and then you're like, let me see if it comes down to 900. And then as it comes down to 900, okay, that means the desperation is lower. This is a sign that the desperation is lower. Any guy who's desperate does not play chicken with the market. He does not see, let me see if I can get a better price. Desperate people don't do that, which means the desperation is now lower. Okay? Telltale sign of a big boy. Okay? Let me clean this up a little bit. So now we have a probe showing us desperation is a bit lower. Okay? Although probes are a sign that, hey, somebody wants to buy. Yeah, that is a sign somebody wants to buy. But the feeling, the psychological part of it means they're not too inclined to buy too much. Okay? So now buyers go up again. We are aware of all these areas that the sellers keep getting smacked at, smacked at, smacked at. Okay? Same thing here. Probe here. If it's a seller, why isn't our seller desperate? Why is he testing to see, well, can I get a higher price? And then he's holding again lower. That means he's not desperate either. Okay? Now, as the buyers come up, they start challenging back up into this area, and you start to see, okay, that's a big green bar that went up. Extreme buyers, possibly. A red bar still got knocked down. A green bar attempted, never got higher. Okay? Can you now look at this area and saying, well, could that be a sell? Is that a possibility for a sell? Now let's understand this in directions of trade management. If you do not know it's a sell right here, but you do know it's a sell after the fact this red candle starts jumping at you, can you do a sell from here now? Or is that now a dangerous area where the buys hit it from? Or you're close to an SNR area where the buyers might hit it. Look at this. This green candle is not just there for no reason. It got popped. It got popped, which means if your entry is here, you might even get a spike sometimes that can kill you. You have to be careful. Just because it looks like it's going doesn't mean you jump in. You play the business game. You negotiate. You negotiate. That is the true essence of trade management. Okay, you want to negotiate, you want to keep your plan in mind. So the bigger player, okay, who's looking at the big picture, okay, all of you guys who are looking at the big picture saying, I want to bloody sell this thing. You are now looking at this as, okay, I know this area. I see some signs where the buyers are struggling. Look at that. He's not going up full speed. No higher high, struggling a couple of times to go up there. And we see some signs of sellers smacking it again. Okay? But if I sell it from here, can I take it all the way down to my recent low? No. Okay, we have to be aware of this SNR area and this SNR area. This is the guy who started it. So we're aware of point 1 and point 2, which means you cannot just sell hoping that this is the spot to exit. You sell using your trade management skills now and saying, okay, plan 1, if prices come to here and they turn around, what am I going to do? Okay, so plan 1's going to be, if price comes to here, maybe I'll remove 50% of my profits, move my stop loss to 0, and if it gets smacked out, so be it. I made some money. Plan B is, if it comes to here, I'm going to move my stop loss to 0, move my take 50% of my profits, and then I'm going to take my profits in this area. Okay, he never jumped back up. He came down here first before going back up. Okay, you made more money. And then your original plan of, let me get down all the way to the recent low, because once you have a pullback, you got to go to the recent low. That one comes a lot later after all this stuff happening, which might psychologically make you say, get out of the trade, or something wrong is going to happen. Okay, and you might end up with a smaller win. Okay, or even a loss. Or even a loss. What if the market turns around and starts going higher? Right? That's a possibility. Look how strong this buyers came in. Okay? So you got to keep all these things in mind. So trade management is basically trying to find the rhythm of the market. You're trying to understand the flow of the big boys. What kind of desperation are they doing? Are they holding? Okay? And then once the prices are up in this area, they're holding. Your whole point is, are they going to drop? Are they going to drop? And if they drop, do you sell right there? Do you sell the moment they drop the hold? Okay? They're holding. They dropped it. That means big money is no longer holding at that support. They dropped it. Now that's like a little breakout trade. You need to figure out if that breakout trade is safe. Okay, which means more work needs to be done at a faster speed. You can't just hit the sell because it's a breakout. Makes sense? I hope that's making sense right now. Which means the safest place for you is still to sell where you have good prices with the other sellers, where the bigger players are interested in selling. Okay? And then if you're wrong, okay, your risk is very nominal. You're okay with that. And if you're right, your risk is 2R, 3R at the same time in profit making, if not more. Okay, so let's take this even further. Okay, I want to finish this entire example. Let's take this even further. Okay, so all of this is happening, and you're watching these areas, and you're like, oh, I can see it might be a sell, but I'm not sure. And then this red bar comes in, and you're like, ah, crap. This red bar came in, but I cannot sell it here. Okay, if the price gets up to here, I'll sell it, but I cannot sell it down here. And then it runs away, and then it runs away, and then it runs away, and you're like, damn it, I missed it. Okay, these are exclamation marks. Yeah, damn it, I missed it. You feel horrible. But when you go back out to the 15 minutes, okay, you go back out to the 15 minutes, where is it? You're like, okay, well, we haven't even technically had a proper V formation yet. We just got one. Okay, it's like the buyer, you know, the rubber band man running up, coming down, running up, full rest. Okay, we got this thing down, and then we're getting, you know, some kind of a V formation, like whether you look at it like this. Here we go. Whether you look at it like either this whole thing like that, or you look at it like, okay, this piece here as a V formation. Thing is, you want to get prices as close to the seller side as much as you want. Okay? So either it's lopsided or not, but in my case, I don't see this as a lopsided, I see this as trouble. Right? If you know this from the V formation lessons, this is trouble. Okay? This is not a good sign. This is trouble. This means something got rejected here. Okay. Anyways, back to the 5 minutes. We're aware now that prices can come up anyways. It's okay. It's okay. Let it go. It's fine. Let it run away. Here we are. So prices ran away. Ooh. Prices ran away. Gets down to this point, and the same buyer, okay, who we thought was stepping up, let go. He dropped the stepping up process, but he's still willing to buy it at this price. Now, what is his signs of how is he buying it? Look at this. So he's buying it, but look at the prices. How is it getting down so low? Why is he not desperate anymore? He's willing to take it at those prices. He's not so desperate anymore. Okay, let's see how strong he comes up. Okay, desperation can come in two ways. The strength of the movement, or if he's stepping up, which means he's willing to pay a higher price. He's not willing to pay a higher price. In fact, he's paying slightly lower price. That's a weird thing for us. Okay, just keep that in mind. Just keep that in mind. He comes up hard, and we are aware. We're going to take this step by step. Take this step by step. He hits it hard. He takes it up. He takes it up, and we are aware that in this area, we had some strong sellers, right? We had some strong sellers, whether you want to use it as supply and demand, or this is the SNR, and that's the guy who started. That's how I normally look at it, okay? I look at these areas like that. Buyers come up very, very hard, get rejected. Okay. Buyers come up again, get rejected. The sellers don't do much. Buyers come up again. Wick on top. Where's my seller? Seller's not doing anything. Buyers come up again. Okay, well, I know we have another area up here. We got an SNR area here. Well, he didn't do much. And then we got this area up here. All of these areas where the sellers keep smacking it down. Okay. Now, you have the moment when you see, when this gets up to here and it smacks it down like that, you're like, should I sell it here, or would I have been better off selling it up here? Okay, think about it. How many of you will say, I would have the feeling that I need to sell it from there? Notice that means you're selling right when a green candles are just coming your way, coming your way, coming your way. Who sells like that? Only people who are aware of the rhythm leading up to it, seeing these kind of things, saying like, what was this? Why is my buyer struggling? Why are there so many candles now versus last time? What's going on? Why is my seller so aggressive on the way down and my buyer is not so aggressive on the way up? Okay, it started off aggressive. The first piece was aggressive. Okay, we'll give him that. Not the next piece. The next piece is the same size of the first one, but it's split up into 1, 2, 3, 4 candles. Why the delay? Why the slowdown? Where's my buyer? Where's his desperation? What's he trying to do? Okay? So that's when you say, okay, now I can take the risk and saying, I'm going to go for it. I'm going to hit the cells with my stop losses just above. Okay? With my stop losses just above. But am I going for this area here? No. Now I do trade management. Here's my sell. I'm aware that the higher time frame, okay, you need your higher time frame instantly available to you, which means you're aware what's happening in the big picture. Like, okay, we got a few movements up, we got a big V formation, we got a fake looking V formation, and we got a test coming up. Could this be it? Maybe. Now, if it's a maybe, your sell that you're doing here, you need a plan. Doesn't mean the sell's not going to work. It just means you need a plan. What's the plan? Okay, option 1. I hit the cells from here. My stop loss is just above here. And I'm aware the second set was weak, but the first push was very strong. Okay, this area creeps me out. And this buyer who started it creeps me out. Okay, which means, if I can get in an entry as close to the sellers as possible, and that's my stop loss, that looks like a 2R to me. Okay, that looks like a 2R to me. I can squeeze in a 2R right there. Okay, here's my plan though. Step number 1, I'm going to get in, and as soon as price gets to here, I'm going to remove 50% of my money, and I'm going to move my stop loss to 0 because it can jump back right at me, and I don't want that. I don't like that at all. Now, that's a risk you're willing to take that way, saying, that's my plan, plan A. Plan B is I'm going to do the same thing, and I'm going to let it keep running, and I'm going to remove the next part over here. Plan C is going to be, okay, well, thinking that how weak it's got, maybe he can get down to the previous prices that he liked to buy from. Maybe he was going to buy it from there again. I don't know. Okay? But I didn't like the way this V formation was. So we got those plans. Okay, now all your plans that you have are profit-based. What about a plan that is loss-based? What happens if you hit the sell and the trade doesn't go your way? At what point can the trade turn around? Okay, you thought of it only in the ways you can make money, but what about if you can't make money? What if you enter the sell here? Where can you get a problem where it jumps back in your face? So we have a couple of areas. We have an SNR here, right? And we have this probe area here where prices were holding last time. Okay, which means if you see this red candle come in and you're like, oh, good, I'm making money, but then you see immediately the next candle becomes green and it closes right up here as if this drop never happened. That's an alert. Your brain is prepared for this situation. You're like, close this trade. I am out. Otherwise, next candle will be green again, and you're like, okay, it's a seller's area, and the next candle is going to be even bigger green, and that's a stop loss. But you will never see it coming if you're not prepared for it ahead of time. Use your levels, use your areas, gauge the understanding of what do I do in every possible scenario. You do that before you hit the trigger. Okay, those of you guys who are really, really strict, write all the stuff down on a piece of paper and do it religiously. Do not get hijacked. Do not interfere with that trade if you just feel like interfering with it. Okay? Do not touch your trade just because you feel like it. Because feeling is the worst way to make money. Okay, you need a plan. Okay, does that make sense? All right. So, keeping that in mind, now, all of this stuff happens. So you have trade number 1, okay, which happens to be luckily good for you, okay, because you weren't sure if it was going to work, but it worked. You did your homework, you did your research, you read the market rhythm, you felt the areas, you looked at signs of the big boys. They're not holding anymore, they're dropping the markets. Why is the seller dropping it? Is this seller right here, why isn't he getting desperate? Okay, because this seller, he did hit it, but he didn't go anywhere. Sellers are not desperate. What's going on? You're keeping track of all these pieces of information. Trade 1, you make it out alive. You make some money, you keep some money in your pocket. That trade is now done. It is not profit. It is now account balance. Don't give it back to the market. That is your account balance. Don't look at it as that's my profit. It's finished. That is now yours to keep and yours to protect. Okay, not yours to say, well, since I made $100, next trade I'll try to make more money, because if I lose $100, it's okay. I don't lose anything today. No, losers think like that. Do not think like that. If it goes $100 into your pocket, that's $100 is gone. Think about it like it's gone, like you've spent the money and it's gone to your account. Now you're starting from zero again. Treat every trade as if it's a standalone. Okay, so now prices come back down to here very, very aggressively. And you're like, whoa, my buyer who was holding, he just dropped. He looks like he's dropped. He's come down lower. Okay. Then he's got back up and he's holding in up here. It's like, what the? So he dropped. Sorry, he was holding, dropped the price to see if he can get a better price, and then he's holding up again a higher price. What does that mean again? Do you guys remember? It means he is not interested in the buy as much. He is going to buy, but it doesn't mean his buy is going to be as powerful, because he's willing to see if he can get a better price, which means he is not desperate at all. Okay? Our sellers, on the other hand, are playing a whole different game. You can actually see them getting slightly desperate each time. Okay? That's how channels are formed and downtrends are formed. Okay? You can see it. See? So as the prices get back up, now you can go back to your 15. Do you have it available to you? Can you guys see the bigger picture in here or no? Because that needs to be instantly available. Do you see the big picture? What just happened? If you don't see it, just step back into the 15 or have a side-by-side view if you want. Oh, sorry. Let's move on out. Where is it? Here we go. Ah, looks like now we have a legit V formation looking thing, right? Whether we count that as a V formation or we count that as a lopsided V formation, this one here, or aggressive V formation. Now we got the V. Okay, now we know things will try to aim for their recent lows, right? So let's go back to the 5. Sorry. Whoa. Sorry. I'm out of control today. Okay, here we go. We're back in the 5-minute charts. So we got this V formation here, and we are now watching for all the signs of what the buyers are doing, all the signs of every area, where they started, where's the SNRs, possible halt areas, and we're like, let's watch and see what they do. Okay, so we're aware this is buyer zone, buyer's area. They hit it. Okay, they hit it. Green candle comes up, and the next candle's instantly red. Oh my God, looks like the buyers are done. That looks like a V formation. Can I sell there? No, cannot. Bad trade management. Bad trade management. That's too risky. You really need to know that the buyers are going to quit there. We don't have that information that the buyers officially have quit. Okay, we don't have that information. We don't have access to volumes and seeing, are they really removing their prices? Are they really, no longer willing to buy this anymore, even though it's at a good discounted rate? Okay, so we're trying to feel the rhythm here. Look at each time he bought it. Very aggressive, very aggressive. Slower. He was buying it slower. Okay. He buys it a little bit aggressive here. Okay, interesting. Gets up, gets up, gets up. Gets to this area. Okay, smacks down a little bit. Interesting. Here's our SNR for the buyer. Here's the guy who started it. Okay. Okay, desperate. He steps up a little bit. Buyers move up again. Oh, interesting. As he gets up to this SNR area where sellers now smack it. Okay, sellers now smack it, but we're aware of this zone right here. We're like, okay, well, if they smack it, I know my buyer is desperate. Maybe he's going to hit it again. Nothing, nothing. He hits it. Nothing happens. Oh, still in that same area. Okay, we don't want to sell right here because that looks like a V formation there. We don't want to sell that because it's still at the area where the buyers hit it up. We're like, come on, give me a price as high as you can. And I would wish to sell it from these guys if I can. Okay? Give me a price as high as you can. You start your negotiation process. Come on. Come on. Oh! Maybe you don't get that price and you're like, okay, I got this price here. After fighting a little bit, you got that price down there. And you're like, okay, I got this price. Now, scenarios. How can I make money from this? How can I lose from this? Okay? Okay, so you do the whole big picture, 15-minute chart instantly in your brain. You're like, okay, I remember there was 2 moves up. There was a V formation, lopsided V formation. And if it's a lopsided V formation, this is the underside of the SNR. Because in an aggressive V formation, we test to the underside of the nearest SNR. Could that be it? Maybe. Maybe. You got to keep this in mind instantly. Okay? Could that be it? Possibly. Okay? So, scenario number 1. If I'm going to do the sell and the sell works, obviously I'm going to have the absolute premium price. Scenario number 2. Okay? So, scenario number 1, you have the premium price. You're going to sell all the way down to the bottom. Our normal way of doing things, right? Take it down to the recent low. Scenario number 2. What if it goes into profit but not all the way? Okay, where can it stop? What if it's the same area? Okay, once price gets down to there, I'm going to have my finger on the exit in case it jumps back at me and I want to get out of this position. But so far, I am seeing signs that the buyers here suck. Last time the buyers were here, they're very aggressive. Okay, look, buyers were here, they stepped up very aggressively. No step up, there's no higher high, higher low. Sorry, there's no higher low here. So they're taking the equal price again, the same price again. Why? No desperation. Okay, so they bought it, but look at the way they're buying it. No desperation. Okay, all these signs tell you your sell is clear. You see all this information that we have to process in our brain? That is trade management. It sounds very difficult, but trust me, any of you guys were saying, oh my god, I can't do this. I'm going to ask you one question. Do you drive? If the answer is yes, then you can do this. This is a lot easier than driving. Because when you drive, how do you know at what point you need to move the steering wheel, hit the clutch, or hit the accelerator, look to the left, look in the rear view mirror? How do you get all these processes in your brain to make sure you move the car 1 inch? This is the same thing. All you have to do is just jump in there, force yourself to do this, and your brain will pick it up. Even though your mind might say, oh, this is difficult, your body and your brain will pick it up if you're thrown into it. Because that's how smart our brains are. It will pick it up. Okay? Alright, so now all this stuff is there, and you're like, okay, so we have 2 scenarios. Scenario 1, where we make full money. Scenario 2, if it starts hovering around this area and we make a little bit of money. Scenario 3, how can it hurt us? Okay, so if we have an entry here, our stop loss needs to be up here. Somewhere around here. Okay, what we're gonna do is, because I got a bad price, I won't be able to move my stop loss to 0, which means now I'm at a risk, which means at this point over here, I'm going to remove 50% of my profits and I'm going to keep my stop loss where it is. Okay, which means I don't lose anything. It's like a break even. Okay, it's like a break even. So that's another way of trading. You don't always have to move your stop loss to 0. You can play the game of you remove some profit and still give the market room to breathe. Okay, as we go further, you're like, oh, it's going up. It's going up. Am I going to hit my stop loss? Oh, no, I'm okay. He's going down aggressively. Okay, remove 50% profits. Okay, remove 50% profits. What are we going to do? Stop loss 0? Okay, stop loss 0 now. Looking at the way how aggressive it is. Okay, that's one of the scenarios. If you're going for the other scenario where you remove 50% in case it comes back at you and turns around and goes for a buy, then you leave your stop loss where it is. It's okay. So 50% profit so far from your position. You're like, uh-oh, maybe it's going to come back up. He held. The buyer held again. Didn't do anything. This is not a place to sell from, guys. All of you people who think that's a good area to sell from, that is not a good sell indication. Yes, he's showing everything that says he cannot make it anymore. But please try to avoid selling from a buyer's area like that. It's not safe. It's dangerous. Okay, you made 50% of profit, comes down to your next SNR area, and you're like, okay, I can make my next level of profits in your next SNR area there. Okay, so this video has gone on way beyond what I was trying to explain. I hope this is like a webinar where only I am speaking. Okay, I hope this is very useful to you. Now you have an understanding how I use trade management myself, how important trade management is to me to understand every nooks and turns of the market, how I understand the rhythm of each candle, how they're processing. But it's not just looking here, but it's always looking here to compare to this, to compare to that. We're doing all this kind of stuff in our brain to make sure we make the best decision possible. Okay? We're looking at stuff that, are they getting desperate? Desperation is a higher high sign. Higher low sign. We're looking at, why did he test the markets? If he was holding at this price, why did he hold a little bit lower? Okay? Why is he teasing the market to see if he can get a better price? He's not so desperate. He doesn't want it. Okay? While on the other hand, we're seeing desperation from the sellers come in. Now, they want this thing badly. Okay? So all these signs, you need to put them together and you have a solid foundation of trade management. And as these skills get better, your trading skills would get better. Okay, back in the day, they used to do something called tape reading. Okay, tape reading is basically doing this, but looking at how much volume at what price is coming in. Okay, just because there's a high volume at a certain price doesn't mean that price is important. Okay, we don't know what that price means. It just means that price is now a reference point. So let's say the price is at $100, right? Just an example. At $100, $5 million was injected into the market. Okay, let's say back in the day, that's a lot of money, right? $5 million were injected at the price 100.00. Okay, that's a point of reference to you. So the price then goes to 90, then it goes up to 100, and it holds. Another 10 million comes in. Okay, price then goes down to let's say 95, then it goes up again to 100. And then you see another 10 million come in, let's say. This now tells you they're holding this price. That's a hold. But then if you suddenly see price go up to 105, it goes to 105, but then instantly it drops back down to 100, and then there's again 10 million at the price of 100. This is a sign that a probe just happened. Okay, prices went higher, then dropped instantly. A probe just happened, but you know that the sellers, the people who are trying to sell this thing are not, they're not so desperate with this. They're trying to see if they can still get a better price. Okay? If the market is good and the people who have the right information, okay, let's say you who's watching this right now, okay, let's say you are a big boy and I'm a market maker. I'm, let's say, FXCM or Oanda or any other stuff. So you're a big player, right? And you're like, okay, at the price 100, I'm gonna short $10 million. Okay, And every time it goes to price 100, I'm going to keep selling at 10 million, 10 million. You have a total of 100 billion, let's say. And you keep selling 10 million, 10 million, 10 million, 10 million. And you're saying, and I'm trying to see like, wait a minute. He's not trying to show me he's trying to sell 10 billion. He's doing 10 million, but he's doing it very quietly. To me, that's a sign I pick up on that, hey, that big boy is selling. Me as a market maker, I have a lot of liquidity and cash too. I start selling also. Now, if I start selling also and you're selling also, and then other market makers look at you and they're like, oh my God, the big boy is actually selling, and they catch whiff of it, that's when the markets start to move, because there's not enough people buying anymore. And then there's desperation for all the sellers, all the market makers, like, I want to sell too, man. I want to sell too. I want to make this money. Does that make sense? So we got the chasers of the big boys. They don't lose money. They actually make money, but they don't make as much money as the big boy. And the big boy has information on how he needs to move the markets. You know, whether you call him a big boy or you call him a bank or economy, whatever it is, just think of him as one entity. It'll make it easier, make your life easier. Think of it as one person. The big boy is trying to do this, trying to do that. Okay, so let's move on to the next video.